Everything that CMHC is doing right now with their MLI Select program is to generate additional rental units. That's their primary focus. Secondary to that is additional affordable units. And they want these well built. So again, they're giving bonuses to those that come to the table with energy efficiency and accessibility. So right now, why on earth would you not want to take advantage of these programs that CMHC, the federal government, provincial government, and municipal governments have put together? So maybe you don't know if that's the type of investment that you want. What I would invite you to do is watch some of the stuff that Grant Cardone's put out. He's a huge cheerleader of this model, big proponent of buying large multi-unit buildings. Again, he feels that this type of investment long-term, as it increases in value based on rents, is the way to go. Another organization that, in Canada specifically, that is a big advocate of this, whether they tell you that or not, they may not want you to do it yourself. They may want you just to invest in their own fund. But Skyline, the Castellan brothers, they started off with individual units, and then they quickly realized that with the economies of scale and being able to have larger building allowed them to have property managers. And with property managers, it allowed them to buy more because, again, they weren't worried about that 3 a.m. phone call that the toilet's not working or whatever. So for them, they've built one of the largest real estate portfolios in Canada. And it was all based on having these multi-res buildings. And what's great, again, if you really want to take a look at what they're doing, what's great is they too believe in some of the tertiary markets. So they're not focused on Toronto. They're not focused on Mississauga or Vancouver. They're looking at what are the cities and towns with a little bit smaller population that really can benefit from these additional units. And I think if you're going to follow a model, look at where success is and what they're doing, and let's see if we can tap into that. Rand just did a video. She did a great job, I think, summing it up, where she talks about when you're talking about rental properties, the market as a whole will dictate where single family goes, right? They're going to, regardless of how well your rental property is performing as a single family, they're going to look and say, apples to apples, what the neighbor sell for, what the other comparable sell for. And you're subject to that value. On multi-res, all they look at is what's the cap rate and what are rents and how are they performing. And they're going to base the value for that property on that. With a new building, okay, so again, we're coming to the table, we're saying, oh, here's a brand new build. You are not subject to some of the rent controls that are outlined on an annual basis. You still have to fit certain things, and you can only raise the rent once a year and that sort of thing. But you are not subject to capping out your rent increases by 1% or 2% or whatever that number is for this year. So again, keep that in mind. So how do you get in to a multi-res building without a ton of capital? So you say, I agree, I want to be in multi-res. I don't necessarily want to buy somebody else's problem. I don't want to buy a 20-unit building that has issues with mechanicals or the expensive stuff, right? An old roof, that sort of thing. I want new, shiny, but I can't spend an absolute fortune on it. I don't want to tie up that money to just buy a building. How do you do it? So how do you do it? You've come to the realization, hey, I want to buy multi-res. I don't want to buy individual rentals. I'm having a tough time justifying paying that much for that individual rental, and is it going to cash flow? I got one tenant, and if something goes wrong, that all my eggs are in that basket for that tenant. Is there still opportunities for you as an investor? And I believe so. So this is why we're really pushing hard on the MLI Select program right now, because it allows for people to get into buying multi-res buildings for a limited down payment. You still need money? Absolutely, right? It's an insured product. We can get financing up to 95% loan to value. So that $10 million building, right, with 5% as opposed to 20%. So instead of coming to the table with $2 million, now all of a sudden, you've got this large asset. And guess what? We've run the numbers on a bunch of different things. That $2 million, when it's an insured 50-year amortization, so the rate's lower, extended amortization, it's less per month. And that, so a $12 million project, it was $2 million more in potential financing, because again, you don't have to take all that money if you don't want to go to 95%, but it's there. $2 million more and $9,000 a month less. So the cash flow just made a ton of sense. And it really stood out to me like, holy cow, this is something that we need to promote. And we've been talking about it for a year. We've engaged in it ourselves for well over a year, for a couple of years now, on different projects for clients. But every time a project is going, or pardon me, a program is going really well for CMHC, the one thing that they do is they don't ever want to be overweight on a specific project. So be aware of that, and that at any given moment, they can come in, and my guess is June of this year, they can completely reshape, cancel, change, whatever they want to do, because it's an insurance product, right? So they're mitigating risk, and they want to mitigate their own risk. So for them, in the past, the announcements for CMHC MLI Select has been the month of June. So just be aware of that. 2026 is also sort of the tail end of the accelerator program, accelerator fund from the federal government. So all these municipalities that have made applications and say, hey, we're going to do this, we're going to put in additional infrastructure, we're going to build these affordable units, we're going to do all these things. 2026 is kind of when it's going to wind up. So they're all telling us, so again, as we make applications for different building permits and stuff, listen, we need this shovels in the ground 2026. So why I'm telling you this, what we need to make sure of is, if you are interested in this, maybe you don't want to build stuff, but if you want to buy the building at the back end, we have investors that are interested in doing the construction side, and they don't want to own the properties at the back end. They would love to meet with you and see if you can come to terms and say, listen, we're going to, have this done. It's going to be MLI Select. We're going to apply for the most financing we can. And then at the other end, when it's built and the refinance occurs and everything, and the dust settles, they can either sell you the corporation or sell you the property, and you assume the mortgage. So again, you know exactly what you're getting, exactly how it's shaped, all this stuff. Like, it's, a lot of opportunity to get in with a minimal down payment. So again, if you're looking for a large building, brand new, with that new house smell, but if you're looking for that big building, brand new, and you have interest in taking advantage of the programs that are available right now, you need to send me a direct message. Okay? So we'd love to connect you with the people that are building. And the other video I did where we're talking to people that are building, we're looking to help them connect to you, but people who want the rentals at the end. So happy to be that connector, and we look forward to talking to you.